Hello guys, and welcome back to the second video of this channel. Welcome back. So as I promised you guys last time, I would be sharing another video to enlighten you more on how to scale in. Scaling in means how you add more positions in a trade, in a winning trade, so that you can maximize your profits. I know you guys always see forex traders posting screenshots, of their trades, and you see so many positions of the same, maybe commodity or index, and you wonder how does this guy just open so many positions at once, because a small retracement can take their profits and make them lose their account or blow their accounts. So what smart traders do is that you don't open all of them at once. You just wait. As the trade keeps on going your way, you keep on adding more position. And the purpose of this video today is to show you how to do exactly that. So as usual, we're gonna be looking at volatility 75 index. This is my favorite synthetic index, by the way, because of its volatility, of course. I am yet to master volatility 100 because I tried trading it some time back. It gave me profits, but it also gave me losses. So when I looked at the risk to reward ratio of my profits to my losses, I found out that my losses were more when I'm trading volatility 100 as compared to trading volatility 75. So I chose to focus on this index, which I also advise new traders to do. You should find that one index or currency or commodity or stock that you find yourself trading easily, you love trading it, your analysis on it just comes naturally, get? So without further ado, let's begin. So looking at volatility 75, let me just zoom in a little bit. So this is how the chart looks. As you can see, it has been on a downtrend. Let me just zoom out quick. It has been on a downtrend. Let me just show you. From here all the way here. This shows that it has been on a downtrend. One main thing I want you guys to note before we even continue this video is that volatility 75 index is an index that measures the S&P 500 stock index. All the stock markets that are present in the S&P 500. This volatility 75 index was created to measure the volatility in those stock market indices. This includes NASDAQ, US 30, US 500, all those Apple, Tesla, Walmart, all those great companies in the US. It was created to measure that. So as you can see, it has been on a downtrend since 4th. Look at my screen down here. It has been on a downtrend since April 2022, April 11th of April 2022. If you can compare this to other indices like NASDAQ, US 30, they've also been on a downtrend. So you can see how they equate with each other. They are both on a downtrend since volatility 75 measures the volatility in these indices. Now let's continue. After identifying my trend, the next thing I do, as always, is look at my supply and demand zone. You look at the most previous one first. So I've identified my first resistance over there. This is my support over here, my most recent ones. Then I can go a little bit back and identify the older ones. Yeah. Let me just push this further back. for you guys to see. That was my older resistance. This is my newest resistance and the newest support. This is the daily time frame. Now you go back to the 4-hour time frame. Going back to the 4-hour time frame. And I don't know if you can notice, but there has not been any vigorous movements in volatility 75 so far. Why? Because we are approaching the end of the year. And as we approach the end of the year, the markets tend to slow down. They tend to slow down because we are finishing the year and not so many things are happening. But towards Christmas, you will notice a lot of volatility because, you know, people are traveling here and there. So the currencies are moving, stocks are moving, you know, things are changing as the year ends. I don't know why it's loading so much. It's taking too long to load. So let me just continue explaining as it loads. As the year ends, markets tends to slow down because the year, there's a lot has been happening throughout the year. So now it's just loading positions. The buyers and the sellers are just loading positions to end, you know, the trading year. But once January begins, you know, the momentum and the volatility will now start moving again. Yeah. Let me just reload this page once more. Yeah. So we move to a lower time frame. We move to a 4-hour time frame. Yeah. 4-hour time frame. Yeah, this is it. Sometimes this internet can be slow. So let me just delete these. This was just my analysis. Stay. Let me delete this quick. That one. This trend line, that trend line. Yeah, now we're good to go. So let me add my support zone. This one over here. So as you can see, the market has not surpassed this support. It also hasn't surpassed this resistance above here. So the markets are really slow, as you can see. If you can count the number of candlesticks present here in this movement here, they amount to days, I'm sure. 2 to 3 days or so, or even 5. So we are expecting the market is now consolidating. We're expecting an expansion after this, either to the upside or the downside. So a good trader, it's up to you to analyze and see the potential probability of where the market is to next. So let's go to a smaller time frame, to the 1-hour time frame. Why is it taking so much time to load? Don't understand. I think I will just stick to this 1-hour time frame so that to avoid this slow loading and everything. It's coming back to the 4-hour again. Let me just move here quick. Yeah, 15 minutes. There we go. Delete this again. Delete. All right. So My smaller time frame is telling me that the market is still consolidating. It pushed down, it pushed up, pushed back down, pushed up, and now it's currently, there's this bearish engulfing candle, which is trying to engulf this previous bullish candle there. So let's wait and see where this candle will close. So what I would want to do here, I would want to, after identifying these zones, so there are two possible scenarios that are going to happen. The first one is after the market breaks down this current support. Let me draw using arrows so that you guys can see. When the market breaks out of this zone, what to expect is it will always come back to retest this zone, in which after retesting that zone, it will push further down to go back to the demand zone down there. That is usually what happens. The other possible scenario is this zone will stay strong. The market will resist pushing further down, and it will now push back up to this supply zone over here. Remember, guys, Forex is always 50-50. The market either buys or sells. Those are the only two possible scenarios. When things like this are happening, when you see a lot of candlesticks with wicks, please avoid trading that market, because that shows that people are not sure. Buyers and sellers are not yet, there's no strong determinant of where the market is, to the direction of the market, either bullish or bearish. So it is advisable to avoid. So now, what I would want to do here is I will wait. After identifying my two possible scenarios, I now wait for confirmations. What are the confirmations? Confirmation number one. If this market, because the market has been on a downtrend recently, I can say that the bears are now strong. The bears are strong, although the market is trying to push up, but you can see the bullish momentum is not really that high. So it tells you that the bears are still very strong. So for me, I would look for possible sell scenarios. Now, confirmation number one will be market breaking out of this zone over here. Let me identify this other low, previous low, that one. So if it breaks out of here, I'll place my first sell, the stop loss above this zone. Then the market will obviously push down to this level over here. Then it will come back up to retest this zone. When it comes back up and it fails to break the zone upwards, I would know that it has now become a new resistance. It was a support, might have become a resistance. When the candlestick, I will look at a time frame like the hourly time frame. That's the best time frame to look for confirmation candles, because they are longer candlesticks than the M15. So when the hourly candle closes below this zone, I'll place another sell. Placing another sell, the market will push down, come back to break this zone over here. If it breaks it, I will wait for it to come back to retest. If the candlestick closes below, I'll place another sell. Then move all the way down. Then in this area over here, I would probably place, say, 2 to 3 trades, but that is according to your capital size. That's how traders do. When you see a trader posting screenshot and you see so many positions and you're wondering, how does this guy risk so much? Doesn't he care? The market will, retrace. This is what they do. They wait for these confirmations and they keep on adding positions. They add up to, so if we are selling over here and this is our demand zone, when the market reaches here, it would be wise to now close your positions because it is now playing at a demand zone. So that's how to scale in. That is how you scale in. Let me try to see if I will move back to a smaller time frame than this, say the minute one, the 1 minute time frame, or the M1. I do this again as it is still loading. When it comes back, I will choose the 1 minute time frame. There it is, still loading. When it comes back online, I input 1 minute time frame. Yeah, there. Now let me delete this. Zoom out a little bit for you guys to see. Yeah, this green line over here, let me just, no, ignore the green line for now. This market zone over here. Yeah. So when the market pushes down, I would wait for it to. It pushes down here, I would wait for it to come back up. When it comes back up and the candle closes below, that would be my first sell position. Sell position over there. Then, sorry, my first sell position. I keep on adding positions according to your capital size, that is, until market reaches my demands and then I will close. That is how you scale in, simply, right? So I wanted to make this video short, but the content to be, educating, insightful. So I hope you have learned something. Thank you for taking time to watch this video. Please feel free to share, like, and hit the subscribe button for more educational content. I will post a link on the description so you can reach me if you have any questions. Yes, that will be all for today.